Assalamualaikum traders, welcome to the new video. As the title indicates and you can read the thumbnail, today I'm gonna make an important announcement, and also today I will be answering some frequently asked questions, like the questions I get most of the times from new traders, new learners about trading. So without let's start the video. But before answering the questions and making an announcement, I would like to review the weekly market for you. This is US dollar index chart, and as you know, yesterday was Friday NFP, and we expected the dollar index to take this liquidity, sell side liquidity, even this liquidity, tap into this weekly imbalance, and then to the upside. The buy side liquidities will be our targets. As you can see, it has not tapped into this weekly imbalance and not tapped the order block open price, but this is a different story in other broker, on one another broker, capital.com. You can see here we have clearly, like, price has clearly purged this sell side liquidity and tapped into the weekly order block open price. This is the weekly order block open price. So this was a nice forecast just before the news about US dollar index. Then we had forecast and gold that I I generally I wanted the market to mitigate this balance price range, and then I will be shorting gold right from the top of this balance price range. But unfortunately, I didn't got the chance to enter in this trade, and gold just mitigate the fair value gap. Of course, this is a fair value gap. Okay, we cannot say that price should have to like mitigate this balanced price range. It can really just tap into this, just a string into this fair value gap, and then go down. So yesterday I didn't pay much attention to gold because I say that, like, I didn't saw any clear opportunity of entering the market for trade. So I just gave it, I think, analysis and then passed off. Then we had silver. Silver was always like kind of clear than gold on low time frames. This was an okay. This is very important. Yesterday we said that British pound GBP USD should sweep this buy side liquidity. Okay, you may not see this buy side liquidity sweep on some other brokers like FXCM. Okay, here we do not see any sweep, but we definitely see a sweep here, and this was logical. I personally wanted the market to sweep this liquidity. So these were the analysis. I have not removed a single line from the analysis which I shared in the group yesterday, both with my private and public, in my private and public groups. So at this point over here, I wanted the price to sweep the buy side liquidity right here, the Tuesday's highs. Okay, this was high of the week, and I wanted the price to go down, at least take these liquidity equal lows. Okay, this was a liquidity pool. Then on Euro USD, I I predicted that, like, I speculated that Euro USD should not sweep the weekly high. So at this point, I made the forecast that Euro should just take the previous day high, and to a maximum extent, it can just mitigate this area over here, and it should not take the buy side liquidity, and these will be our targets. So Euro fell very, very aggressively, and this was anticipated right before, like beforehand. It's not kind of hindsight data. It was anticipated, and this was a nice trade both in euro and GBP USD. So there were solid reasons, very solid reasons, that I said that euro should not sweep the buy side liquidity, but GBP USD must sweep the buy side liquidity. Let me show you the group. This was US dollar index analysis. Okay. Then we have this in pound GBP USD. As you can see, I wanted the price to sweep this buy side liquidity. In EU, I just wanted the price to take out the previous day high and just tap into this kill zone, this very small kill zone. This was US dollar index. This is TVC broker, and we do not see any wick here, but on capital.com there was a liquidity sweep. And here is our GBP USD on Onda. Yesterday, just like it was a huge move. Within minutes, we saw this move. Like in euro, there are like 8:36, just 6 minutes into the news, and we have seen such a huge volatility. These were my trades in EU. This was the target, and in GU, this was here in this broker. We have not seen a liquidity sweep as well. So these are the targets. I'm still holding GU trade, and the target is about 250 pips for this trade. So I didn't saw any like news. What is the data? And after that, so this video is gonna be very important. The next segment is gonna be very important. So I will suggest that you should stay till the end of this video. So these are some frequently asked questions which I get. Like most of the there were many questions, but I tried to filter out a question and just select the 10 which were frequently asked again and again. The first question is personal one: for how long you've been trading? I've started trading back in 2019, 2020, in the last quarter of 2019, I guess, and the first quarter of 2020. So it's been around 4th to 5th year. Tell us briefly about your trading journey. I can't like tell you about the trading journey I had, but it's kind of topic for some other day, and it will be kind of a complete video on this topic. So I'm trying to this is a pending question of you guys, so I will explain it later. What is the difference between ICT and SMC? There's not much difference. If you say there's not much difference, but what normally, let me try to make it easy for you. Normally, we in ICT, we do not have any specific market structure. Yeah, we do have swing highs and swing lows, intermediate term swing highs, swing lows, short term swing highs, swing lows, and long term swing highs and lows. But there is not any specific structure which we can refer to. But in SMC, they have developed a very defined structure, and there are specific rules for that structure. So this is the only difference in ICT and SMC, although all of the SMC concepts are derived from ICT, like you hear about order blocks, fair value gaps, inducement. So inducement is basically liquidity. It can be internal range liquidity or external range liquidity, but the concepts are same, but the logics are different. Like SMC traders are trading these concepts blindly without having the knowledge of, like, if they trade the inducement, they do not know what is this inducement, like is it an internal range liquidity or external range liquidity. And then of course there are market structure shifts. They mark every market structure shift, like inducement, boss choke, etc. But we do not look at the market structure shifts until and unless there is a higher time frame PD array. So this is the main difference between SMC and ICT. In ICT, we do think more logically, okay? and not blindly just follow what ICT said. You have to verify it with your own knowledge, with your own experience in the markets. Where to begin with ICT for a new trader? That's kind of a tough question, but I will suggest you start from ICT Mentorship 2022 model. This is the perfect model for every trader, where he is basic, intermediate, or advanced trader. So 2022 is the ICT best and simplified, easiest model you can learn. Do I need to learn complete ICT to be a consistent trader? No, you don't. Okay, this is the question I get a lot of times. A lot means a lot. Okay, I get a lot of times this question, that do we really need to learn complete ICT to be a consistent trader? So the answer to this question is simply no. You just have to understand the basic concepts of liquidity, imbalances, liquidity types, and imbalances types, then order blocks, the logical answers to why order blocks form, and it is not random. Okay, everything is pre-planned and everything is timed in these markets, because algorithm is very sophisticated and it works on two things: price and time. So you may get an order block, and this is the price perspective of order block, but if you do not align the time factor with that order block, it will not be your perfect order block. So in SMC, they will mark each down close candle as an order block and each up close candle as an order block, but this is not the case in ICT. In fact, some ICT traders do this stuff as well, but it's not like this. You have to think what 99% traders can't. So you have to always consider price and time in combination, not just price or not just time. So the answer to the question should be: understand the concepts of liquidity and imbalances, order blocks. Like in blocks, you have order blocks, breaker blocks, mitigation blocks, and there are other concepts: order flow. Always try to trade in the direction of institutional order flow. Then there are some other, like price and time theory. Of course, you need to learn a, one or two models and develop an edge on that model. How to develop an edge in trading? So this is again a very commonly asked question and an important one. What is an edge? The edge develops when, like, you have selected a model for yourself. Like I do market maker model all most of the time, plus one other model. I'm not talking about that model in right here, but let's say we take market maker model, and I've been working on market maker model for the last 1 year, 1.5 years or so, at least 1 year. It's been a completely 1 year that I've been working on market maker model. So if you select a model, a strategy, a pattern, in fact a pattern, okay, it can be double tops, double bottoms, it can be quasimodo, it can be head and shoulder. So it downs to your personal preference. Personally, I prefer market maker model, and if you can learn it completely right from basic to advanced, then you have to work on it for the next 6 months completely without training that model on live account. Once you develop enough confidence in that, and of course back tests, forward tests, journaling along in these 6 months. So after these 6 months, you will have to, like, call the price live. Okay, call the price live, like I have been doing for the last, in I think I'm doing it from the January of 2024. So it's been 5 or 6 months since I've been calling the price live, like you see here, with around 80% accuracy. So this thing comes after you have an edge on the model. So if you work for complete year on one single system and execute each and every trade on that system, so this will become your edge, and you will have confidence on that model, on that edge, to execute trades with your real account. What is important of time in forex trading? Like you always say, price and time theory. Oh, this is an extremely like algorithm. Like you say, it works on price and time. This is price, we have time here. Okay, so algorithm works with price and time. The price delivery comes at specific time intervals, in a day, in a week, in a month. So it is pre-planned. Like let's say we have a news event on 8:30. Okay, 8:30 a.m. news event, like NFP yesterday. So the institutions will inject price volatility. Okay, they will inject volatility at 8:30 a.m. and this is of course pre-planned, programmed by algorithm. So algorithm don't know where are our stops. They will do what it is supposed to do. Like the algorithm has there. My mentor said, and he used to say, which was a very bold statement, that every daily candle is already printed on the algorithm even before the chart you see. So everything is fixed, the NFP data is fixed, the reaction was already confirmed by the algorithm. They had to do one thing only, like we anticipated that euro should not sweep this liquidity. So this is what we do here: reading the price section, reading the like identifying the smart money footprints in the markets. Okay, so this is algorithm, price and time, everything is timed. 8:30 news volatility is timed. The ICT kill zone 2 to 5 a.m. and London kill zones are timed. These, without price and time theory, you cannot make it as a successful trader. It's almost, for me, it's impossible that if somebody tell you that he's a consistent trader and he doesn't understand the time theory, or he doesn't use time theory. Between technical edge and risk management, which one is more important in trading? To be honest, these two are linked directly. So if you follow a proper risk management, a proper risk plan, you can definitely generate profits over the period consistently. But it is not possible without a technical edge. If you have a technical edge and then you manage your risk reward, only then you can be consistent in trading. Without it, without technical edge, your risk reward will give you nothing. And without risk reward, your technical edge will give you nothing. So both are directly connected. You cannot differentiate between these two. Do fundamentals drive the markets? Not at all. Okay, not at all. We should always prefer technicals over fundamentals. Fundamental is, like I said, price and time theory. The fundamentals are supposed to do what they had to, even before the fundamental data pops up, even before the data shows up. Like this is the same NFP example for you guys. What else I can show you to to demonstrate that technicals are superior or fundamentals? Can I really make into the top 3 to 5% of the successful trader if I work hard for the 3 to 4 years? Of course you can. Of course you can. But there are two things: work harder or work smarter. You have to work smarter in trading. To start smart working, you have to filter out the knowledge, because there is abundance of knowledge on YouTube, free of cost. ICT channel is free of cost, completely free education. You have, like, he has around 600 plus videos on his YouTube channel, completely free of cost. You have trading view free of cost, MetaTrader 4 and 5 free of cost. But you have to filter out the knowledge which is like uh, which knowledge is good for you and which is bad for you. As a trader, and it's been 5th year in my trading journey, I had gathered a lot of knowledge, but there were some things that I had to avoid. These were not good for me. These were making my trading a lot more they put me in trouble. Okay, so there are things that you should have to trouble and filter, sorry, filter, and to filter out knowledge you have to have the knowledge at least. So if you have some knowledge, at least a basic or intermediate level, then you can filter out the knowledge which is like good for you, or which knowledge can harm your trading career. So this is all about FAQs, and I will try someday that I can arrange, if I can arrange a live FAQ session, so I will answer your questions there as well. Now come to the announcement. The announcement is that I've been thinking for the last 3 to 4 months that at the end of this year and from the start of 2025, I will stop providing this is something I've been thinking for some time now, like around 2 to 3 months. From the start of 2025, I will stop or at least pause the private mentorship for some time, maybe a year or two. And of course, it depends on things that at the moment, like I have around 10 to 12, 10 to 12 students. Okay. So I would like to stick with them for the rest of the year and even for the 2025 complete year. So they have the learning curve, then they have the practice and experience phase. So I want to make them traders, okay, not just provide. Like whenever I enroll a new student, I will clearly tell him in the face that I can teach you trading, but I cannot make you profitable trader. I cannot make you a consistent trader. It downs to you, okay. It completely depends on you, how you use that knowledge, how you control your emotions, because I cannot control his emotions, okay. I cannot trade by his side. I will not be like always with him. I will not be able to support him at every single moment. So it's up to everyone's personal preference, up to everyone's like mentality. Some have strong mentality and they can become really good traders within short amount of time, within a short period of time. And some have problem with their mentalities, with their psychology, so they take a longer time. So that's why I decided to stay with them and work on them, try to improve them as much as I can. So this is the reason I have decided to stop mentorship at the end of this year, and from 2025 to 6 or 7, 27, I will think about it, of course. If I like, it's kind of at the moment, this is a decision I've made. And the other announcement is that I have decided to translate ICT 2022 mentorship for you in Urdu. And this will be like a complete free course on YouTube. On my YouTube, I will try to translate ICT's 2022 mentorship, each and every video, each and every episode. Like there are 40 plus episodes, so all of these will be translated in Urdu. Plus I will also try to include some of my personal experience, some of my personal trades or predictions in the live market with that episode, along with the ICT slides, along with the ICT video summary. There are like around 30 to 40, even an hour of episodes. So I will try to make them as short as possible and as simple as possible, plus some of my personal observation in the market as well. So this is what I have decided. Maybe from 2025, I start slowly working on this project, ICT 2022 mentorship completely. And these are the two announcements I wanted to make in public, and this is why I have posted this video. So that's all about today. That's all in this video. Inshallah, we will meet again. For now, goodbye and Allah Hafiz. Thank you very much for watching the video.